All right. Welcome back to capitalcompetent.com, and this is episode 4 of the 1K to 10K challenge. As always, start off with the website. Not any big updates, just keeping this steady. You can always go back and read it, something that will help you. Also, the resources page, just for you. Not any big updates. Okay. Checking on the YouTube channel. Got another subscriber. Welcome, welcome, welcome. Glad you're here with us. Really excited. This is the start of something big. Okay, so you two are the first two, right? I'm really excited for this to hit 5, 10, 20, 100, 1,000. So welcome you two. You guys are the first two in here, which is very exciting for me. Okay, so let's get right into it. Let's look at the portfolio today. Okay, we are down today. Um, Down on some news, which I will get into later. And today's real focus is always pay attention to macro events. Okay, there's a lot of stuff going on, and I'll talk you through that. We got the tariffs, we got the AI stuff. You're gonna get thrown a ton of information in times of uncertainty like this, and I'm gonna give you a blueprint of navigating that. But before we get into that, let's go into some updates. Okay, first update, added our $105, so our cash position is about 25% of the portfolio. I sold 4 shares of Ford, and my reasoning was because of something I'll get into later with the tariffs. Automakers' supply chains are very long and they're very complicated, and they go through many countries, including some of it is in Mexico. Okay, I still think it's a good price. I just wanted to reduce my exposure with this uncertainty. So we're sitting about 5%, which I'm very comfortable with. If it goes down to $8, that's my price, including the risk, where the risk is worth the reward. So that means it'd have to hit a 52-week low for me to keep buying. I'm very comfortable with this. New ad is X. We put 4% into Exxon, and my reasoning was for this is because I was looking into um, something America needs, and we need energy. Where do we get our energy from? I was looking at a ton. You hear a lot of stuff, solar and our shift to green energy, which I agree. I believe we are going with that. Um, but we still, 70 to 80% of our energy needs are provided by companies like Exxon. So right now, the money is going to Exxon. Okay. Now, the growth potential of Exxon not very big. However, when you look at the price, right, including its 3% dividend yield, I think we can get more than 10% on this price right here. And if it keeps going low, aka if it hits that 52-week low, I'll add another 4%. Okay, because it always comes down to how much you're risking versus the reward. I think right now, 4% of the portfolio is a good risk to reward. So if you're wondering why we are why our cash position is so high and why I have not been adding to the SPY is because of I believe we are a little bit priced right now. And I know people say don't try and time the market, just keep investing, keep investing. Concerned right now. So concerned that in one of my other portfolios, I actually bought a put on the SPY, right? I bought a $4,000 put. And if we look at this chart here, okay, always look at macro events. All right. When you are in the market and you're paying attention to news, there's going to always be an oversupply of news. Okay. Stuff is going to go on in the world, and there are companies out there, there are news companies that try and get you the information as quickly and as fast as possible. Okay. When you have so much information and so little demand of attention, you only have so much attention. When you've got so many people trying to provide information to you, they are going to compete with each other to grab your attention. Now, this for you, this could be a distraction and it could lead to misinformation. Okay, so always have a macro of the market. If we look at this right here, this is the SPY. Once Trump took office, he is a strong leader and he's easy to get behind with all the rosy things that he says, right? He has a really bright future and I hope he hits all that. But right now, we are pricing in that it is already happening. It's a for sure thing, which, okay, you can see, I always say the story and the numbers go together. And the more you understand that, including macro events, the better understanding you'll have. Once Trump took office, we saw a tick up, 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 up. Okay. AI from China came out, and we saw a sharp contrast down, right? And then a recovery, right? But what is going on? You can get jumbled up in all this, but what is really going on? Okay, we got players. We are the most powerful country, and competitors are being introduced. We have to focus on ourselves to keep growing and innovating. Okay, DeepSeek AI came out, right, as a real competitor to us, which we have been spending a lot of money on. Okay, we still are going to be number one, I believe. Um, but if you look at looking back at history, if you look at the dot-com bubble came out, there was a ton of companies that were competing with each other. When you have that many competitors in the same space, it forces efficiency. And if your company is not as efficient as the top leaders, you simply cannot compete. A good way of thinking of that is if you're running with elephants, right? If you are not faster than the elephants, you're going to get trampled, you're going to die. It's the same thing in here, right? As we keep innovating, we are going to uh, there's going to be an introduction of competitors. Okay. And that's where we're sitting at right now. We have a really rosy picture of the future, which I believe we're not going to hit completely, but we're going to be just about there. And if you look at the numbers, we are priced in like it is a guarantee. You've got Tesla with their taxi um, robo AI service. You got Meta, Apple, Microsoft, all with these huge claims, right? And we are looking at it like it's a guarantee. Now, today, right, Trump moves ahead on tariffs. Okay, so he is going to actually um, enact his plan, right? It's not just talk. Now, there are huge challenges that come with that. Okay, and we are trading like it's everything is perfect and everything we say we are going to do completely. Now, if you look at history, we will continue to grow. We're the most powerful nation, but is everything going to go perfectly? I do not think so. Okay, so I bought this put right about here, right? Because we're all-time highs means we are uncontested. We're just going to keep going. We're going to keep going, keep going, keep going, which we are. But now we're going to get now we got some competition, which is going to force efficiency, which is in the end is a good thing, right? But there's so many challenges that we have to overcome before we break up or we break out. Okay, you can be a fan of technical analysis or not, right? But in my experience, about 7 to 8 out of 10 of what I like to call gaps close. Okay, now what is a gap? A gap is this right here. This is a gap. We see a gap up, right? And then it gaps back down. I bought this put as a plan to exit around 584. I see a gap here. Okay, and in my experience, 7 out of 10 times this close. Now, is it going to close tomorrow? Maybe not. Is it going to close in a week? Maybe not. A month? Maybe not. That's why I bought it so far out and why I paid so much as a protection, right? My puts for 640, right? As I can afford to be wrong a little bit, right? But my overarching theme, enough about me, enough about me. Okay, my goal is to provide information to you. And with all this information in the world and everything going on, you have to build yourself a very simple picture of the world. And you do that by looking at the decision makers and the people that are really high up where our lives depend on their decisions. Okay, we have huge players like countries, right? States. We got Trump, China and trade between it. We are the most powerful. We're going to continue to grow. We always will grow. I believe that um, forever. We got China, who's being introduced as a competitor, right? They have a really large workforce, right? And they're becoming more capitalistic. They're going to come to compete with us. Okay, that introduces challenges to us, which means we are not going to have a rosy outlook um, immediately, right? Trump is not going to come into office, make these changes, and boom, the future is just automatically bright. There is going to be challenges, but we're trading off of um, off of that we are like everything's perfect. Okay, I know that's a pessimistic outlook. It really isn't, right? It's just um, being realistic, okay, and building that simple view for yourself and for others. And who knows? I could be wrong. That is the point of this channel. I encourage you to challenge me on my ideas, right? Let's go back to the portfolio. This is where we are sitting. I am in wait and see mode. Wait and see. We have 75% of the portfolio in very safe assets, bond, gold, cash, SPY, right? I'm going to start deploying this once I see opportunities. Okay? Quick note before we move on, we go here. Last thing I'll say, we have been approved for options in this account. And I will introduce options once we have a healthy um, size. Okay, what we're sitting out right now, options are incredibly risky, but the more capital you have, you can actually use it to your advantage and really get some good gains. So stay tuned for that. Probably about episode 15, we're really gonna introduce options and we're really gonna see some growth. Okay, so what I'm gonna do, I'm in sit, wait and see mode. We'll see what happens. We are at a really good spot. I'll add 105 to the portfolio and I will give you an update next week. Appreciate y'all for watching.